Welcome, Miko. So wonderful to have you here. I know we've almost done it a couple of times and it was so disappointing that you were always booked up so much. And I know you've got your involvement or fingers in lots of pies in the crypto world, and was wondering if you could talk a little bit about what you're doing there.
Yeah, rather than a pie, think of it as a cake. It's sort of 3 layers, really. I'm a co-founder of an exchange called Evercoin Exchange, very primary for me. Okay. Another important layer is the investment layer. So I'm a venture partner with BitBull. I'm an advisor with XRP, Arrington Capital, as well as general partner of Gumi, which is a Japan-based crypto investment fund. Okay. And then I think at the bottom layer of the cake, it would be advisory. So I have a personal advisory service. I have about 14 clients to date. It's probably about 300 million in raise, all hitting hard caps, but it'll probably get to about $1 billion in total raise by the end of the year, I expect.
You look so relaxed for someone that's got so much going on. It's amazing. Do you want to talk a little bit about Evercoin?
Yeah, so Evercoin is really separating this notion of custody and security from liquidity, because one of the amazing challenges that we see in the industry is that people are forced to choose between liquidity, right, and security. And the reason why I say that is 99.5%, actually it's 99.95% of liquidity is on centralized exchanges. It's about 3 million of daily volume on decentralized exchanges. There are 253 of them being currently tracked. And then if you look at centralized exchange, it is very close to 6 billion in daily trading volume. So liquidity is clearly centralized. Yes. Right? So the point being that Evercoin is seeking to establish kind of an optima that architecturally separates the custodial aspect, which is really about custody and settlement, and then having liquidity in the other segment, which is really order management and trade execution, right? So it's really trying to hit that beautifully harmonious balance that will enable people to not be forced to choose, because at the moment it's either one or the other. You either have security or you have liquidity, and that's really, a Hobson's choice. It's not a very good choice. People are very uncomfortable right now, especially the more sophisticated, knowledgeable investors.
That's very cool that you're addressing that issue. And I know Joe, he has contributed on panels before, and I'm interested in your piece in BitBull Capital.
Absolutely. So I'm a venture partner with BitBull Capital, and to me, they have a tremendous lensing into the industry because they're actually tracking performance of all the major crypto funds. Anyone that you've heard of, they really have at least a close relationship, if not an LP relationship with. Wow. And as a result of that, they're able to see the ebb and flow of different types of trading styles, whether it be ICO, venture capital, arbitrage funds, algorithmic funds, so there are lots and lots of different strategies that are ebbing and flowing at different times. And so it's a very, very interesting way to understand the totality of the crypto investment industry.
Yeah, good on him for setting up a fund of funds for the crypto world. And I was wondering what you see in the ecosystem that you think needs to be strengthened up, because obviously we're sort of in such early days as far as more general acceptance of crypto and blockchain, and also what you think is really great about this system.
So clearly the biggest topic has to do with on-chain performance, particularly the smart contract construct, because at the end of the day, when you look at this concept of decentralized exchange being extremely unsuccessful at establishing liquidity, imagine an exchange order book that runs on the Ethereum blockchain on Solidity, right? The problem with that is that the entire blockchain is capable of about 7 transactions per second. And if you can imagine running an order book on that, it's just completely insufficient to be able to handle what's needed. Yeah. The result has been the creation of these off-chain, so-called centralized exchanges that handle custody, order management, transaction, and settlement. So it handles everything off-chain, right? Which re-injects these crazy, essentially unregulated banking institutions, right? That we were working so hard to essentially remove, right? So if you look at the Satoshi Nakamoto Bitcoin white paper, it is about the removal of untrusted third parties, not the reintroduction of those. So to me, that's a huge flaw in what we've been doing. And Vitalik Buterin has said very clearly, he said centralized exchanges should burn in hell as much as possible. So it's a very, very strong statement. But at the same time, that's both a problem of blockchain performance as well as a problem of decentralized exchange, which is downstream of that, which is if we could execute all those things on chain at speed, we would do so. But the thing that's amazing is that consensus always takes longer than fiat. Right? So if you're just arbitrarily declaring these things to be true because I said so, it will always be faster than because we said so, which is consensus, because we have to come to agreement. And when you look at the block speed, that's how long it takes to come to agreement. On Bitcoin, it takes 20 minutes to come to agreement. I mean, it's not fast.
Really interesting. Where do you think we're going in the future? Like, what's your vision, your personal vision of the crypto blockchain world?
So I believe that we've reached a huge tipping point and that we're going to see mass adoption led by institutional investment that is coupled with regulatory certainty. And the reason why I'm confident in this is that we actually start to see first world economies like Korea taking a leadership position, right, as well as extremely maneuverable domiciles. So in the context of things like Malta, Gibraltar, Switzerland, Singapore, Hong Kong, even Taiwan is now really getting into the game with their like crypto congressmen. So the thing that's super interesting that's happening is maneuverable small domiciles are now competing for fintech innovation. But there are now also first world geographies like Korea that have regulatory leadership and in some sense are not relinquishing the leadership to more maneuverable domiciles. Because of that, I believe we reached a global tipping point. I think that regulatory clarity will come in the form of AML. So I think the mandatory KYC will be very clear, and honest crypto will take a very strong backseat to kind of a much more cleaned up and regulated cryptocurrency environment. But along with that, we'll see very significant increases in the total value of cryptocurrency, including the emergence of these so-called security token offerings, which will add trillions of dollars to the total size of the cryptocurrency environment.
And the poor old venture capital community obviously are in the midst of a huge sea change. A lot of them are friends of mine, and just wondered what your perspective is on what's happening on that level as far as crypto versus venture. Well, ICO versus venture. Yeah,
so my perspective on it is that venture will win. And a very contrarian perspective. I happen to be a venture capitalist with Gumi Crypto Funds. And the thing that's great about the pendular swing is we went through a premature kind of decentralized capital movement. But it turns out that like the qualifications of watching Shark Tank or whatever it is does not make you a legitimate investor during this crazy speculative bull run, right? It's very easy to like make a lot of money, right? But what we've all learned is it's just as easy to lose it all in this protracted bear, right? So the thing that's amazing to me is that the professionals are starting to get credibility. Does not mean that the long tail and public investment is going away. Far from it. But those are becoming followers of diligence proxies that are trusted and can build a long-term brand, right? So when you look at the best firms in crypto, some of them overlap with the best firms in VC. So if you look at like Andreessen Horowitz or Sequoia, and you start to see Bain Capital coming in and Trinity, you're starting to see Excel. So you're starting to see some names that are traditional names now taking a leadership position in crypto. And that's a great harmony, I think. And
I think really the thing that a lot of ICOs were missing out on was that experience that came from having a VC on their board, or the people that they would bring in. So it sounds like a very hopeful future, your version of it.
Absolutely. And to me, like, one of the incredibly basic things that has been missing from decentralization in terms of the capital markets is diligence on governance. And it's just astonishing lack of governance, and just proceeds being dispensed willy-nilly, people buying Lambos, and it's been absolute rubbish. So to me, the basics of fiduciary directors and things that there's no venture-backed company can escape, right? That is stuff that is hard won and yet exceedingly simple, So to me, these basics need to come back, and those are the basics that fueled the .com boom, and to me, we got some incredible companies, decacorns and bigger, out of that. And in fact, infrastructure that's powering the world today, right? And obviously you can criticize those companies, kind of Googles and Facebooks, but, everyone uses them every day. So it's good infrastructure.
Thank you so much, Miko. It's been a lovely learning experience just talking to you. Thanks so much.
Great. It's a pleasure. Thank you.